What's going on, guys, and welcome back to another video. So in today's video we're going to look into the company Workhorse and if I believe that it is a buy at its current NAV and what I believe is going to happen to this company in the weeks, months and even years ahead. But before we get into today's video, I just want to say thanks very much to the 250 people that have subscribed to this channel thus far, and if you haven't done so already, I'd be really appreciative if you consider subscribing to this channel, as our next target is 300 subscribers, so thanks very much again. Workhorse Group Incorporated is an American manufacturing company based in Cincinnati, Ohio, currently focused on manufacturing electrically powered delivery and utility vehicles. The company was founded back in 1998 by investors who took over the production of General Motors series step van and motorhome. And in terms of a more detailed description of the company, so Workhorse Group Incorporated designs, manufactures, builds, sells and leases battery electric vehicles and aircraft in the United States. It operates through two divisions, the automotive and aviation. The company also develops cloud-based and real-time telematic performance monitoring systems that enable fleet operations to optimize energy and route efficiency. Its products include electric cargo vans and medium and light duty pickup trucks, as well as horsefly delivery drone systems. So it's definitely the way forward for the transportation industry in the years ahead. So I believe Workhorse is quite an exciting company in that aspect. The company is traded on the Nasdaq and has ticker symbol Wkhs. It is in the consumer cyclical sector and its industry is auto manufacturers. At the time of recording, it currently employs 81 full-time employees. In terms of Workhorse's top holders, here's a breakdown of this. So 20.58% of the shares are held by insiders, 22.79% of the shares are held by institutions, 28.7% of the percent of float held by institutions, and number of institutions holding shares is currently at 74. So just looking briefly at the company's financials in terms of their 1 day, 1 month, 1 year and their max chart. Currently at a NAV of just over the mid-20s, this really could be a bargain in the years to come. And again, it's worth noting that this is more of a kind of speculative stock. So if you're not into kind of volatility in the market, so this could drop 10% today and it could go up 20% tomorrow. So if you kind of prefer more consistent steady kind of gaining stocks like Coca-Cola or Pepsi or McDonald's, then maybe the stock isn't for you. But if you're looking for long-term kind of growth speculation potential, then Workhorse might just be the company for you. When you look at the 1 year chart, it's quite impressive that even since June, the NAV was at about $2.50 and has skyrocketed, as you can see, in the middle of July, and it has kind of went on an upward trajectory, well, up and down ever since, but overall it's going up. And you can see here now it's currently at about $26 or $25, which is very impressive. And again, if you look at this chart just from the outset with no other outside information, you might think you might have missed the boat and that all the future catalysts have been incorporated into the NAV. But I believe this isn't the case for this company, as with electric vehicles and all things nature and energy related in the future, that these have so much potential, just like the Apple that I covered in yesterday's video with their fitness sector that they're bringing out. I believe that electric vehicle sector is definitely one of the ways forward, and because there's still a lot to be known about this the EV sector, that it is volatile, so I wouldn't be putting all your eggs in one basket either. You should kind of diversify out across a number of different electric vehicle companies, just to kind of cover yourself a bit more, as any one of these companies could crash tomorrow if they came out with, let's say, a test on their battery didn't work, so they could crash and burn basically. So have a few different electric vehicle companies in your portfolio if you are considering investing in this sector. So when also doing research on Workhorse, nearly every second news article started to compare Workhorse to Tesla, and you can see here that a 970% rally in the last 6 months that this investor placed investorplace.com believes that this company still isn't overvalued even after its 970% rally in the last 6 months. Now, as you can see, there's a lot of people comparing Workhorse to Tesla, and they feel that they remind them of the fiscal year of 2016, where Tesla published in the Times magazine that it provides salient context for Workhorse stock. So this is definitely something to consider also. We can also see on Nasdaq.com there are reasons behind why Workhorse could be a creditable alternative to Tesla. Just in summary, they kind of stated here that they were saying that Workhorse is staying away from kind of certain aspects that Tesla is in because they wouldn't be able to compete, which is certainly a very good option to take, as in they wouldn't be able to beat Tesla, which is, it's good to know what they're good at and what they're not. So they're kind of staying away from what Tesla is at. They're kind of in direct competition with Nikola also, so it will be interesting to see how that goes. And down here, there's a big opportunity they noted. This site for Workhorse, as Amazon commercials have given the kind of go ahead or the green for package delivery outfits, and they're embracing electric vehicles. Now, one big catalyst that could have a factor in Workhorse's NAV is the USPS is in their latter stages of negotiating a $6 billion contract to replace the old, antiquated traditional delivery trucks. Details on this process are scant, but it's clear Workhorse is one of 4 competitors in the fray, and this is an obvious stock moving announcement when it arrives. So this will obviously have a big impact on the NAV if they can get this contract, but if they don't, it could also have a drastic effect on the company. Another thing to note, and even though it's not directly correlated with the Workhorse company, is Battery Day. Now, the annual meet of Tesla shareholders, also known as Battery Day, was postponed due to the pandemic, but it's set to go ahead on the 22nd of December, and Elon Musk has given a hint of what is expected to happen. And with Tesla being the market leader in the electric vehicle sector, even positive and negative news will definitely have a ripple effect across all other electric vehicle companies that are invested. In terms of my Trading212 portfolio, as you currently know, I have 3 different pies. So we have the dividend portfolio, the ETF portfolio, and the growth portfolio. You can see here in the growth portfolio that one of the 6 companies in this portfolio is Tesla. So I might even take Tesla out of this portfolio and change the portfolio name to the tech portfolio, and make a separate pie and put Tesla into that with 2 or 3 other of the biggest kind of electric vehicle companies, and name that the electric vehicle portfolio. And obviously, because this would be more of a speculative move, I wouldn't be putting a lot of money into this pie, but it'd be kind of interesting to see how it would perform over the coming weeks, months, and even years. So it's just a consideration that I'll be looking into later on. So with that being said, that brings the end to today's video. If you liked the video, it would be great if you would like, comment, and especially subscribe to this channel for more related videos. And comment below what you think the potential is for the Workhorse stock, and if you think it's a buy, or are you going to avoid the stock completely, and do you think the electric vehicle sector is the sector that is worthwhile investing in for long-term investors, or do you think it could crash as well? So thanks very much, and I'll see you guys in the next video.